Hello fellow traders. In this session, we will be looking at the short to medium term outlook of the Philippine Stock Exchange Index. In this daily chart, we can see that the PSEi has established a rising wedge pattern over the last 4 months. A rising or ascending wedge is a technical pattern that narrows as price moves higher. It often signals the top or swing high in a market that has been trending higher. It usually has a bearish bias. We can also see a narrowing of the Bollinger Bands, which usually suggests an imminent volatility, either to the upside or downside, just like what happened last early March and late May this year. If the index chooses to go higher, we have 4 key levels of resistance to eye for in the short term. The first 2 immediate levels are at 6,318 and 6,610, followed by 6,890 and 7,065. If it confirms the breakout to the downside, we should expect levels of support to be at 6,135 and 6,000, followed by 5,865 and 5,660 in the short term. Relative strength index is currently at 50. In this weekly chart, we can see that there's a gap created last March of this year. It also serves as a strong key level of resistance for the index. If the index breaks the strong resistance at 6,610, we should see the next levels of resistance to be at 7,213 and 7,578, followed by 7,875 and 8,175. If the bears are strong enough, the next target is at 8,610 in the medium term. If the index fails to rally, the psychological level of support is at 6,000. If it pierces that level, the next immediate support will be at 5,660 and 5,330, followed by 5,015 and 4,592, which lies at 78.6% Fibonacci retracement level. If the bears pushes the index lower, the deepest level of support is at 4,039 in the medium term. Relative strength index in this weekly chart is currently at 47. The second featured stock in our list is Ditto. In this daily chart, we can see that this stock is in an uptrend in the short term, creating higher highs and higher lows. If Ditto does not break the uptrend line, we should see the next levels of resistance to be at 3.20 and 3.40, followed by 3.60 and a stronger resistance at 3.92 in the short term. If Ditto breaks the uptrend line, the next levels of support will be at 2.80 and 2.50, which coincides with the completion of the corrective wave pattern in the short term. Relative strength index is currently at 47. As we take a look at Ditto's weekly chart, we can see that it is trading in a downtrend channel in the medium term. If this stock does not break its current support level, we should expect the immediate levels of resistance to be at 3.20 and 3.92, followed by 4.60 and 5.00. Ditto's management has announced that the commercial launch will happen in March 2021. If it meets its target launch, we could see Ditto move higher to 5.40 and 5.72, followed by a stronger resistance at 6.20 in the medium term. If Ditto breaks the support, the next levels of support will be at 2.80 and 2.50, followed by 2.10 and 1.60, which lies at 78.6% Fibonacci retracement level. If the bears push this stock lower, the deepest support is at 1.00 in the medium term. Relative strength index is at 53. The third stock in our list is Cebu Pacific. In this daily chart, we can see that Cebu Pacific is trading sideways in the short term. One of the most battered sectors during the pandemic is the airline and aviation industry. This is mainly due to subdued tourism and travel restrictions imposed by the government to limit the transmission of the disease from one person to another. However, the government recently made a decision to gradually reopen the economy and ease travel restrictions, thus resuming Cebu Pac's operation. If this stock chooses to fly higher, the levels of resistance will be at 43.20 and 46. Followed by 49.40 and a stronger resistance at 55 in the short term. If Cebu Pac fails to rally, expect levels of support to be at 40.00 and 36.20, followed by a stronger support at 31.20, which lies at 100% Fibonacci retracement level in the short term. Relative strength index is currently at 46. In this weekly chart, we can see that Cebu Pacific is currently in consolidation phase. However, a bullish divergence has been spotted in Cebu Pac's weekly chart. A bullish divergence occurs when prices fall to a new low while an oscillator fails to reach a new low. This situation demonstrates that bears are losing power, and that bulls are ready to control the market again. Often a bullish divergence marks the end of a downtrend. Once the bullish divergence is confirmed, Cebu Pacific needs to get ready for takeoff. The immediate levels of resistance will be at 43.20 and 46, followed by 49.40 and a stronger resistance to be encountered at 55. Once it breaks 55, Cebu Pac could easily make a stopover at 61.00. If the bulls are strong enough, the next levels of resistance will be at 64.20 and 67, followed by 70 and some turbulence to be encountered at 74 in the medium term. If Cebu Pac fails to fly higher, the immediate levels of support will be at 40.00 and 36.20, which lies at 78.6% Fibonacci retracement level, followed by a stronger support at 31.20. If the bears push this stock lower, a skid on the tarmac at 22.30 is expected in the medium term. Relative strength index in the weekly chart is at 35. Don't forget to like, share and subscribe to Candlestocks to get updated on the latest stock picks every week.